There we go. No idea why it does that. It's obviously an update on the software or something, but okay. Morning, everybody, again. Freaky Friday. Non-farm payroll day. How is everybody? Morning, David, Wyvern Post, John, Virginia, Breno, Martin, Stevie, Kennelly. Everybody I said hello to when you couldn't hear me. Morning. Right. Let's have a quick recap of yesterday. Morning, Cyril, Daniel. Friday, non-farm payroll day. So just quick recap of yesterday. Where are we? ADR reversals. So ADR reversals sitting in 3.2% drawdown. Pound Swiss and Pound New Zealand 2.5 between them. So those are the two that are causing the drawdown. Everything else is fine. Banked 0.62 drawdown control yesterday, 0.7 banked this morning. Obviously, it's the start of the month, so we're flat at the month moment because it's only just started. H1 RSI mean reversion banked 0.6 yesterday, 0.7 banked so far today, 3.5% drawdown. Pound New Zealand, I've got one aggressive on this. I'm trailing it. This has got into profit this morning. I could have banked 0.5% on it this morning. Thinking I should have done, but I'm just holding it in a minute to see what happens. I've got a feeling we might get some more New Zealand dollar strength today, so we'll see. But 3.47 drawdown, 1.24 banked on the month so far. H4 RSI 0.9 banked yesterday, 0.71 banked this morning. Still in 9.8% drawdown. This H4 has been really struggling over the last month. Really just not able to get enough movement in the market. We're getting lots of movement, but the movement's just not big enough to get out of these positions at the moment. So just sitting in drawdown control at the moment. Well, in risk, obviously, drawdown. 1.6% banked, but we're just waiting for some movement. This Aussie New Zealand's the main culprit at the moment with 3.1%. We've also got Euro CAD sitting on 2%. That's a contender for drawdown control, aggressive drawdown control. However, we have got a position in profit. So I'm going to let that play out today and see if we get some more New Zealand dollar strength. If we do, Aussie New Zealand's going to come down. So I'm going to let that one play out for another day. H1 hedging, 11% drawdown, always in somewhere between 5 to 20% because it's a hedging strategy. So Euro pound is in 2%. Nothing else in problems there. 1.47% banked yesterday, 0.87 banked today, 2.34 in the month. So month's kicked off fairly well. 2.3, 3 point, let's call it 4, 5, about 5% so far. It's only the second of the month. News today. It's a fair bit of news to go through from yesterday. We've got 5 minutes to the open. Let me just check that I'm all set up. Backs. So news today, obviously nothing until non-farm payroll. I'm not going to stream for non-farm payroll. I'll come on at 2:20 as normal because I want to play the open basically. But the open after non-farm payroll, be very careful because quite often it is quite lackluster. There's no volume left. All the volume for the stock indices and the stock sector purchasing and everything all gets done at non-farm payroll with the unemployment rate. So we quite often find that the market open after non-farm payroll is very slow. So for the opening range breakout strategy, obviously the whole purpose of the breakout strategy is volume and momentum. You don't get volume and momentum usually after non-farm payroll. So sometimes you do, but quite often we see after a big news event, the market's just shot, it's had it, it's done. It's done its volume. So just be careful of that. So 130, we got big potential movement on the US dollar. Overnight news, we had crude yesterday. Now, we've got 4 minutes. Crude went nuts yesterday. Absolutely nuts. So we had a move of 35 pips yesterday. So 150-ish ADR. straight up on these inventories. So the inventories came out at 4.5 off of a negative 1.5 forecast. Looks amazing. However, we've had figures like this over and over and over again, and the market hasn't batted an eyelid. So something changed yesterday that made them want that bull run. Remember, we were looking at it yesterday saying, right, this is the low, this double bottom bounce, we should be playing it back up to the high. So if you did get in that yesterday on that symmetrical triangle break I said about, well done. So that's long. So back up to the highs. We'll see if we can get any more movement on it. But yeah, really nice movement on oil. Overnight as well, Biden fell over. Sorry. You shouldn't put someone that old in charge of your country. Just not right. Central bank close to the point where it can hold interest rates in place. There's a lot of talk about freezing rates for this upcoming June meeting. So disinflation is disappointingly slow. Inflation is still way above the Fed's target. We know that. So again, yeah, we want to increase our interest rates, but we don't think we're going to do it in June. Complete mixed messaging from the Fed. I think we should at least skip raising in June. Inflation started coming down unexpectedly fast when we could, if it came down unexpectedly fast, then we could cut rates. This is not my forecast. So basically just stating facts, saying we could put it up, we might not do. So real mixed messaging again out the Fed yesterday. So, but the US dollar yesterday, obviously, weren't happy about it. So the PMI figures yesterday collapsed. I took a long, well, the H1 RSI extension took a long yesterday on the US dollar CAD, on a few US dollars. After this catastrophic, this was a 225 ADR move off of that news yesterday. I've got the feeling today we're going to see very disappointing figures on unemployment rate. This drop yesterday was not off of that PMI figure, and it was not off of that positive unemployment figure. That US dollar drop yesterday was partly to do with the Canadian dollar and oil, but to do, I think, with a leak possibly on the unemployment rate and people knowing that this unemployment rate is going up, which is negative US, but we'll see. So US dollar, not happy yesterday. Canadian dollar, extremely happy yesterday because oil, but the pound has absolutely collapsed today. So that one's come down. But lots of movement all over the place yesterday. Undoing of all of those moves off the back of the end of month. Markets open. Your pre-market breakout is on the 5 minute is there. Orders gone in. We've got a gap fill to the downside. However, we've gone long. So gone long on the DAX on the open. Morning, everybody. Haven't said hello to. Will the pound New Zealand dollar keep on falling? We need another 70 pips. Good question. We'll have a look at that in a minute. Just wait for the pre-market opening range breakout, which seems extremely weak this morning. There doesn't seem to be any volume in the DAX, but we have got this gap fill to the downside today. So well, possibly a downside break is going to be a little bit more viable. Let's have a quick look at where we are with the DAX. We'll just watch it over here. So this is the 15-minute opening range plotted out here, and obviously that's the 5. The DAX, we got the gap fill done. Well, sort of. So this was the gap fill that we were looking at this day, which we didn't manage to get to. Yesterday, we came up, filled that gap. We've gapped up above the gap now to gap down. So there's a gap up and a gap down. So Possibly today, retest this area and then come back down and fill that gap next week, or let's just get this gap done and then we can decide what to do from there. So we'll see what happens. So it looks like we are flipping short. Okay, so stopped out on long positions, flip short. So just a rejection of that pre-market, straight up double top, rejection of the pre-market high. But not a lot of volume this morning, so this might be a bit of a whippy one. We'll see what happens. Be nice if it stops out so we can see what the loss recovery does today. Be a good test. So DAX targets, obviously, the obvious target is the gap fill. That's the first target today, and obviously the high of yes, that's not high yesterday. What the hell's that? It is, sorry, yeah, oh yeah, of course it's got a gap. So yeah, high of yesterday is the obvious point, and then the gap fill would be there. So with gap fills, I always look at gaps in two different ways. If the gap is if the close is very close to a previous high or low of the day, that area you can kind of class as the gap. Anywhere in there really designates a gap fill. So I would always play cautious and go for that, go for the high as being the gap fill. In the same way as here, look, that level there, kind of I would class as that gap being filled. But the actual gap is there. So that's the real official to the pip gap fill is there, but that's what I would class as really a gap fill. So either of those. But obviously we've got downside. Upside, you're looking at this week's high basically is there. So we might come up and retest this week's high. Where did we open? We opened there. So, but so far this candle basically is looking like that week. So it's a bullish hammer. So stopped out both ends. This will be a good test today. Yeah, so stopped out both ends on the gap. On the pre-market opening range. So whipsaw. So basically now what the EA will do is watch for inside bars and basically take an inside bar breakout next to see if we can get that initial move. So the old version, or the old version 2 that I was developing, what it would do is would it automatically flip long now. So it would be sitting there long because it got in immediately as soon as you get stopped out. And what I found with that, although it is profitable, is days like this, if you get that, it's just catastrophic. So like this afternoon, for example, after non-farm payroll, if we get a really weak open in New York, you could quite possibly find you get literally half an hour of complete sideways movement. And all you're going to do is literally just hemorrhage cash until a point where you say, stop hemorrhaging cash. So this seems to be a better way of doing it. Slightly more drawdown, a little bit more drawdown than the previous version, but it won't drive you up the wall. For me, that's much more important. Okay, so it looks like we might be going for that gap fill now. So the 15-minute, and again, if you look at the 15-minute opening range break, which is there, you've gone short. If you're taking the 5-minute opening range break, you haven't been triggered on that yet because your offset wouldn't quite have triggered the trade, but you're looking like you're almost going short as well. Zero direction today, so we'll give that a few minutes to unwind. So ADRs so far today, we've got Aussie dollar CAD. That's the only ADR hit we've got at the moment. Canadian dollar. Aussie dollar strength. Yes, so we've got Aussie dollar strength this morning. So Aussie dollar CAD is your first ADR today. So that is bearish. Whoops, wrong one. So that is bearish at the moment. We're in a nice little trend. So potentially this is a pullback on the next leg down. Could obviously get back up into the 24.72 zone and wait for bounce up there. But if you want to take that as an ADR hit today, that is a viable short. Reversal alert on it is up there. So you had the reversal alert basically at ADR. And you've had the retest as well. So there's your M pattern. However, it doesn't seem to be doing a lot at the minute. So, but that is an ADR hit. So that's the only one we've got today. So the pound New Zealand, I'm just going to quickly cover this one because I'm in this. So this at the moment, I took this aggressive drawdown control position. So this trade here, I took as an aggressive drawdown control position there. In case we didn't get a push further, because this was too close for the EA to get in to that previous position. We pushed up and then the EA took another position here, I think it was, there. And as it did, it slammed straight down. So I decided to leave this aggressive drawdown control position on, put the stop above the high, and we've basically pushed down second day. So this is now trailing. This is the stop loss for this aggressive drawdown control position. This is now basically trailing at, I think it's 560 or 600 or something. 560. So 56 pip trailer. Cancel. Good. So yeah, basically just trailing this at the moment. So this is either going to stop out in profit, or we're going to get back down to ADR. So I'm looking at this propulsion gap basically as being the target today because it's ADR and it's the closest propulsion gap. So you can see how this propulsion gap from this accumulation here, they pushed. This is exactly where we bounced. We retested. So they bought this level. And this is the level they started this move. So the buyers that started that rally have added back into their positions at this level. So we need to see if the sellers more selling pressure now, or these buyers are going to take control back. And if they do, they're going to push back up into these propulsion areas where the sellers are going to be sitting. So this is a key level. When this level breaks, we should flush. When we flush, we should hit ADR, and that will take that TP out. And then I'll close the whole position out in profit. Somewhere down here, I saw this morning when we got down to there, I think we were sitting in something like 0.6% profit or something. It's break even now. So I can close the whole lot out now if I want to and just get rid of it, or do drawdown control. So one of the reasons I wanted to leave this open until the live this morning was just to demonstrate drawdown control. So you can see I've got 800 something dollars there. Yeah, so there's all the positions on it. There's 5 positions on this. So my choice is here with this aggressive drawdown control position. I can close this out right now, bank that 0.87%. God, help FX signals are back again. Piss off. Spammy scammers. I'll just get rid of these idiots. So yeah, so the choices are, I can close this out now and do aggressive drawdown control. So the idea behind aggressive drawdown control is we take a large position, which actually works out in our favor, or it stops out and we take a loss on it. When it works out in our favor, we can then either hold that position to get us into break even to exit the position. We can go for a nice big profitable run with it, or we can use it to just close out and then use it as drawdown control. So I can close this $840 odd out now, and I can take off $200 off of that, $200 off of that, which reduces the pressure if this does continue to push. Also brings the average price up closer to where we are at the moment, and also banks 0.4%, taking me up to 1% for today. So that's one option. Second option is, as I just said, go screw that. That was an awful trade. Get out of it. Done. Go flat. So what you're going to do is you're going to lose all the drawdown control. So there's 3 or 4 drawdown controls done. So probably about 0.4, 0.5% loss. I can just take a 0.4, 0.5% loss on the entire position over that couple of weeks and just say, right, walk away. The other thing we can do, as I say, is we can leave this as a runner. So this has the potential now. We've got these two positions here. We're flat. We're flat with 4.16 lots short, right? So let's do some maths. If this hits ADR today, I'm going to bank $1,270 there. Plus, so we take this one off there. We take everything off at the same place. $1,500 there, roughly. $12,000. What? 1,450 plus 1,275, wouldn't it? That one will make probably $200 on. We will take a loss of 450 and 500. So let's say we take a $900 loss. So we're going to add on that another 125 minus 900 is. So that other option we've got is we go, right, I'm holding this trade from here because it's looking like we've got the reversal alert. We started pushing down, we've accumulated, we've broken. So let's assume we're going to accumulate and break back down to ADR today to test that propulsion gap. That is going to make me 1.9% profit. Yeah. So someone asked in Telegram this morning, who's in Pound New Zealand with an aggressive drawdown control position on, what should I do? Should I bank it? Should I, those are the questions that I ask myself when I'm in this position. You have three options. That aggressive drawdown control position, the whole point of aggressive drawdown control positions are to do aggressive drawdown control. You take that profit, you use that profit to do drawdown control. You take off the size below where you are at the moment, which brings your average price up, reduces your overall lot size. And if it pushes against you, it releases the pressure. So that's one option. Second option, close the whole lot out, walk away and go, I survived. Third option, greedy. Yeah, I can't answer the question as what to do because there is no answer. It's down to you as a trader. If you're sitting like I am with 1.24% in 2.84% of drawdown, which is nothing, it's just a normal day at the office, is there any incentive for me and worry about this trade? No. Right now, I couldn't give a monkey's. I'm in 3% of drawdown. So what? It's just business. If, however, I was sitting in 12% of drawdown, I would be thinking very hard about closing that out, walking away and going, fought that fire, now let's deal with the others. Yeah. If I'm sitting in plus 1.2% of drawdown, or not drawdown, in profit, and I've got 3.5% banked after 2 days of the month, I'll be looking at this and going, hey, walking on water. Let's just go for the home run. Might as well bank another 2%. Yeah, your attitude is going to be totally different depending on what your current situation is with every trade in your portfolio, your overall portfolio position, how much you've banked this month. Last month banked 20-odd%. Well, hey, had a great month. Let's let it ride. Yeah, I can. If it goes up to there again, I'll close the whole lot out with 3%. Who cares? I made 20% last month. If last month you lost 5%, you'll have a totally different overview and outlook on this trade right now as to whether or not you should be closing it or not closing it. Yeah. So I just wanted to cover that because obviously it's a question that comes up a lot. I've done a lot of videos on it. It's covered in the bootcamp. There's separate videos on the YouTube channel about aggressive drawdown control positions and how to get out of them. Because there is no answer. There's no one answer to it. It's going to depend on your personal circumstances. But that's my personal circumstance with this particular account right now. And I've decided to let it run for ADR because we're so close. It's in profit. And I've got a trailer. So the worst case scenario is this pushes up and closes me out there with another 0.5% of profit. And then I can relook at the portfolio. By the time that happens, if that happens, this one that's in 1% might have moved massively into profit and banked, in which case then this situation is totally different. In 3 hours' time, this drawdown is going to be a totally different number to what it is now. So you have to make decisions constantly as you're watching your portfolio and the market move, which is why I have this trade manager dashboard up all the time, because I'm constantly looking at this. If this thing is not sitting anywhere near 10%, I just don't even do anything. There's nothing to do, is there? If you've got one trade that's in 4% and this is sitting in 6%, you've got a problem to deal with. Deal with it, which is what I did with this one. Yeah. So just wanted to cover that because it's a question that gets asked. Somebody asked it in Telegram as well. And because I'm in this trade and they're also in this trade, it makes sense to cover it in here. So there you go. Morning, Brian. Just catch up on the chat. Daniel, I like NAS for a sell. Go for it. I would trade that later though, because it's not open yet. Are the gaps broker specific? No. You'll have to, there's two types of broker. Yeah. So stop me out, gone down, hit target. So there's your target short, but you stopped out on it this morning. So gaps, there's two types of broker. You have brokers that quote 24-hour pricing. So the Frankfurt exchange closes at 9 Frankfurt time, and there's no more trading. It opens an hour, the electronic exchange, this is, opens an hour before the bell rings at 8 a.m. So the market opens at 7 a.m. Frankfurt, the bell rings at 8 a.m. Frankfurt. So some brokers fill this with speculative stock prices because the prices do actually trade electronically, but they fill this basically with data. So you either will or won't get the gaps. This broker, Forex, shows actual exchange data. So the exchange opened there. The prices of the stocks when the exchange opened were different to where they closed. Therefore, there is a gap. Gaps get filled. So you can, if you've got a broker that doesn't, that quotes 24-hour pricing, you can basically draw a line when the market actually closes and draw a line at 7 a.m. UK time or an hour before the market opens your time, and mark that with a line and mark that with a line and say there's a gap. Or you can just use a broker that has gaps, that just uses exchange data. Right, we got an inside bar. So 13 seconds left. We are going to draw pending orders on this inside bar, and we will take the next break of this bar, which is going to be pretty wide. I've got this, there we go. So buy stops, sell stops, inside bar, looking for a break. Pretty sure that's going to break long because it's closed very strong. Again, it might prove me wrong. Long. So broken long, but this market is really weak today. So we'll see. So stops readjusted, lot sizing readjusted, so that the risk is based now on that candle, because this is the candle that we're breaking. So either we are going to do one of three things here. We're going to go with a bull candle, which means we're going to put in a higher high and a higher low. We're going to go with an outside bar, which is a higher high and a lower low, which means it's going to stop out. Or we're going to go with a bear candle. Well, we can't go with a bear candle because we've got a higher high. So it's either going to be a higher high or it's going to be an outside bar. So this break will either work or it will get stopped out with an outside bar, which again is more indecision in the market. So inside bars and outside bars basically mean the market can't make its mind up whether it's going to go bullish or bearish. So again, when that outside bar goes in, if that outside bar goes in, quite possibly we'll get an inside bar off the back of that, and then we'll try again. And all we're doing is we're waiting for this range to complete and the market to decide, do I want to go long or short? And when it does decide, we go with the momentum. And that's when we take the profit on the move, hopefully, obviously. But this is really weak today. So this will be a good test. Right. There we go. So that's drawdown control lesson done. Come on, why is my charts not opening? There we go. Let me just catch up on chat. Outro, morning. Amy, I don't have the balls for aggressive drawdown control. Assuming, Amy, you are female. Virginia, Steve, I often feel it's just me against my broker, and my charts don't always reflect 100% what's going on. Trade your own charts, Virginia. I have had lots of people over the years saying to me, my charts look different to yours. How do I get them to look the same as yours? Does it matter? Trade your own charts. You trade what you see. Remember, the odds of anything happening are 50-50. Yeah. Whether your chart says it's at that price or that price is irrelevant. If you see something there that you think I'm going to press the button on it, the odds of it going up or down are 50-50. Doesn't matter. One of my mentors, we had in the group that we were in, which was a forum at the time, we had every single new member, and this was going back a decade, right? So 10 years ago, brokers quoted what the hell they wanted time-wise. Yeah. So when you look at charts now, you will have a broker that quotes either UTC or UTC plus 2. There are virtually no brokers out there that are not on one of those times now. We've centralized everything. We've made it all simple. Yeah. In the old days, your broker quoted whatever you wanted. So if they were in Germany, they would quote your broker, the chart time would be in German time. If you're in America, it would be in American time. If they're in Australia, it'd be in Australian time. So depending on where your broker was based, your chart time and the time read on the chart here was totally different. And the conversation we had with every new member was, how do I get my charts to look like yours? They don't look the same. That's because your candles are being painted totally different, because one of the brokers is on New York time, one of the brokers is on this time, and basically your 4-hour candle ends at a different hour to my 4-hour candle. Therefore, your charts will paint completely different candlesticks. When you're trying to teach someone to trade candlestick patterns, like a bullish engulfing, and you're going excellent long with a bullish engulfing on XXX, they're going, but it's not a bullish engulfing, it's a bearish candle, because their chart is different. Absolute nightmare. So the long and the short of it was, he said, don't trade our charts, trade your charts, trade what you see. Because if I see a bullish engulfing on my chart, right, it means that over the period of time that I've looked at, it's gone from there to there, or from there to there, for example. If you see something different, you will take a different trade to me. But again, the odds of the trade that you take when you hit the button of price going up or down from the point that you hit the button is 50-50. Convert this chart into a line chart. Now we're all seeing the same thing. The odds are the same, whether you're using a bar chart, a tick chart, a line chart, any kind of chart. When you hit the button, it's 50-50. So it doesn't really matter about charting, about candlestick times and all that sort of stuff. So let's forget about it. So when you see your broker not showing you gaps, right? So let's say, for example, on the DAX today, if your broker isn't showing you this gap, yeah, and you've seen this candlestick pattern going in, what do you think it is? Bullish or bearish? Looking bearish. Yeah. The fact that you haven't got a gap or you have got a gap doesn't change the fact that the market opened bearish this morning. It's short. So whether you see that or not, if you watch what's going on with price, it tells you whether or not it's going down or up. Whether it's going down or up, look at the other day. This is a good example. What did I say on Wednesday? We were sitting here and I was going, this looks like it's going for the gap fill. So trade it up to gap fill, but watch yesterday's low. When we get to yesterday's low, we might get a bounce. We didn't even get to yesterday's low, but it was going long. Now, it didn't do the gap fill that day. So the whole purpose for me saying this looks like a long because of the gap fill was moot, because it didn't do the gap fill. It just went up and then it decided it wanted to go down again. So whether you saw that gap, I saw that gap, or anybody didn't see that gap, doesn't matter. The market went long, so we went long. So it doesn't matter whether you have the gaps or not. really. But just know that gaps get filled. So whether you class that as the gap or that as the gap, yesterday and this morning, it's completed it, hasn't it? It just does it. It just does. So it just helps if you know they're there. But trading view, obviously, if you don't see the gaps on your broker, either get another broker demo, and just that has got gaps like Robo Forex, and use another MT4 just so you can identify the gaps, or use TradingView. And there's loads of brokers to choose on TradingView. You can just use TradingView bare naked charts to find and identify gaps. So this is breaking down this morning. Well, it's not really, is it? Bit quiet. Are those massive propulsion gaps orphaned, would you say, from last week on GN? Don't know. This is obviously the news. This is the interest rate release here. So this is actually one big gap. The fact that the market actually gapped, or Robo Forex gapped up. This is actually one big old propulsion gap. So at the moment, obviously, price is just pushing away from them. We won't know if they're orphaned or not until price has done that and gone off the top of the chart. If it does that and it never comes back down into this area or this area here, and it goes up for the next 3 weeks, then yeah, this is orphaned until it's not. Yeah, propulsion gaps are only orphaned until they're not orphaned, until they're not filled. So what I class as an orphaned propulsion gap is something that I can see on my chart that hasn't been filled yet. So this one here, for example, and this one here, I only go back 1,500 candles so that I can see, you know, on the hourly chart, if I zoom right out, I want to see back all the way to the gaps. But really, the older the gap, the less likely it is to get filled. So at the moment, these are all orphaned. But if price does this over the next 4 weeks and comes down to here, this won't be on my chart anymore because price will have moved forward and this gap won't be there because it'll be more than 1,500 candles in the past. So I won't even be looking at it. And I won't even know it's been filled because it won't be on my chart. But if I change my chart to 3,500, I would say that that is not an orphaned one anymore. It's, you know, when I use the term orphaned, it's just basically one that, you know, just we've not got back to recently. That was an orphaned propulsion gap when we were down here until the news hit. Then it wasn't. But that was only a few weeks old. Anything, if you look at the gaps, yeah, anything that isn't filled after about 3 or 4 weeks means that that propulsion move held and we've started to trend away from it. That's what an orphan propulsion gap is. So 3 or 4 weeks, if it's not back here in 3 or 4 weeks, it means the market has no need to do anything there. It's done. So the people there have written off those losses and we've gone. Or the market just doesn't have the pressure to get back there, or it's a fundamental shift where there's just literally never going to be enough sellers to get back to this area because the New Zealand is fundamentally now in trouble. We just don't know. You'll never know until you get there or don't get there. But right now, yeah, they are. But we're only look how many days we're. This was formed last Wednesday. Look, we're 1, 2, 3, 4, 5, 6, 7 days in. This is remember the climbing the stairs, falling down the elevator shaft scenario. Yeah, if this decides to fall down the elevator shaft and does a 175 followed by an accumulation day followed by a 200 ADR day, we're going to be back down here on Tuesday, Wednesday next week. In which case, then this is just a gap fill. You just don't know. You'll never know until it happens. No way of predicting it. So we're pushing back up again. DAX is just not happy today. No movement. I have gaps on the other other indices, but not the same as me. Yeah, so just don't worry about it. Can we look at CAD Swiss? Yeah. So ADRs, obviously, we've covered. There aren't any. RSIs, there's quite a few. CAD Swiss is one of them. Let's have a look at that one. CAD Swiss, we'll go through all the RSIs now. CAD Swiss, we've got these two big rallies, obviously, with the Canadian dollar. So the Canadian dollar's had two big days put in, one off the back of the US and one off the back of oil. Obviously, today we've got to see what goes on with oil. It looks like it wants to rally again today. Again, propulsion gap fills, all on the cards. Higher high is on the card as well. But so the CAD Swiss has got the possibility of powering up today. The euro has been very weak and dragged the Swiss franc down with it, and that is due some strength as well. So we've got strength against strength here, potentially. And it really depends on what happens with non-farm payroll and the unemployment figures for the US this afternoon. If we get a miss on those figures, i.e. the unemployment claims come out higher than expected, which I think they possibly will, the US dollar's going to drop and the Canadian dollar will drop with it. But at the moment, there's no entries on this. There was a potential entry there, but the reversal happened before the RSI extension went in. So the EA didn't actually take a trade on that. So you would have potentially had an entry there, but if you were in, you were out. So if you shouldn't be in this in any direction at the moment, flat. But if you were in it there, you were out there. If you took the entry yesterday, it's M5, isn't it? This chart problem I've got is M5. Always the M5 data that seems to take forever to update. I might build a little script so that when I launch my MT4, it runs through a script where it just, while I'm in the shower or something, it flicks over to M5 on every time frame and sits there for 3 minutes or 2 minutes. It just loads all this data in because it drives me nuts every day. So if you took that one there yesterday, that nice M pattern reversal there, you're sitting in profit on it at the moment. But where it goes today is going to be down to the US dollar. It's an H4 RSI extension. Oh, yeah, you're probably in it from H4, aren't you? Yeah, so H4 RSI extension. Obviously, the last extension we had was there and there. Those both played out nicely. So, yeah, you'll be in one here from there. Second entry. Yeah, just 2 entries on it at the moment. Early days, if you're in it, you won't have more than 2 on. You shouldn't have actually 2 on, should you? 31? Yeah, probably. Yeah, 2, possibly 1, maybe 2 trades on. Sure, near enough break even on it. Can you share your thoughts on pound US? Yeah, I'm going to do that one as well. Let me run through these, and then we can have a look at anything we haven't covered. Can you recommend any account type at Forex that fits best for position trading? Any, really, doesn't matter. You pick, doesn't matter. If you're position trading, you don't need tight spreads. You don't need fast market execution. You just need a decent broker. So all I can say is, Lucas, go with the cheapest. So an ECN connection is probably your better bet, your best bet. The Prime account is also good, but any account's good. Spread betting account. I don't think Forex do spread betting accounts. But if they do a spread betting account, it's good because you don't pay commission. But anything, just cheapest execution costs is what you want to look for. What's the cheapest account? Speak to Forex. Go into their chat and just say, what is the cheapest account? Basically, this is how I trade. I place multiple positions. They're quite small, and I get into lots and lots of trades. I'm looking for your cheapest possible way to trade. And say you're a swing trader or something, you trade the hourly and 4-hourly charts, and you're not scalping it in and out 100 times a day, and they'll recommend you. Best thing to do. But an ECN is probably your best bet. Tim, are you more specific in which ADR trades you take compared to RSI trades? Example, the ADR hitting significant support resistance levels, and your stake size is different from the ADR trades. No, so everything's the same. So ADR reversals, I risk 0.25 over half an ADR. Same with RSI extensions. That's my entry risk. Whether or not I take the ADR reversal will depend on the portfolio and what the portfolio is doing. So my exposure, basically. So if I haven't got any exposure on, so for example, today, we've got Aussie dollar CAD. So if I look at my exposure and I see an ADR hit to the upside on Aussie dollar CAD and a short opportunity in a strong downtrend, RSI is not extended on the 4 hour. RSI is not extended on the hourly. So I'll look at that and go, right, well, I'd much prefer that when I get an ADR, but an ADR is a scalp. Have I got good propulsion gap targets to the downside? Yes. Is that within a third of an ADR? Yes. Probably a good entry because it's in a downtrend. It looks like a pullback on a continuation move to the downside. So yeah, it looks good. Can I take it? No, because I've got exposure on the Australian dollar short. If I didn't have any CAD on, only odd on short, let's say, for example, there was only one odd short, and I've got CAD exposure short, I could take that ADR short because what it's going to do is add a second entry short on the Australian dollar, and it's going to add a Canadian dollar long entry. And this is down to personal preference. I personally, I've kind of changed my opinion on this over the last few years, but I don't mind having a hedge on. So having a long position on the CAD and a short position on the CAD, because whichever way the CAD goes, if the CAD is the catalyst that pushes whichever currency, I'm going to make money, aren't I? I just don't want to have too much exposure in one direction on it. So that's the only thing that goes through my brain. As soon as a signal comes up, I'm like, that looks like a good short. Can't take it though. This account obviously takes everything because this is the kind of demo account that's taking every single trade. But personally on my account, I wouldn't be shorting it if I had exposure on. My account's fully exposed at the moment, so I'm not taking anything new. There you go. Euro pound. We'll have a look at that in a sec, I think. Yeah. Right. So let's run through these. I think this is probably what everybody wants to look at anyway. Aussie dollar yen. Let me just quickly check DAX. Not going anywhere. So just still in that long on the DAX. So just quickly, so far $1,500 in loss out of the trades triggered so far. So we've had 1, 2, 3 positions triggered. If what happens next is we get a break to the upside and we hit TP there, that is $750 in profit. Yeah, so that trade there with the, because there's two trades on obviously, we'll get the account back to break even. But what will happen is it will TP on one and the second one will be trailed into profit. So if then price pushes and hits target 2, which is very unlikely in this case because it's 125 ADR, because we're playing quite a wide gap here, stop candle, that will be 3,250 profit in total. Obviously ends the day in profit. So what would be lovely now is to have a lovely little trend day where we get up to here by 2 o'clock, and at 2 o'clock it will close all trades out automatically because it closes out before the New York session opens. Actually today we've got non-farm payroll, so this could actually go nuts, couldn't it, today? This could actually be a big profit day today. Getting ahead of myself, obviously. We're only literally 67 pips. 6 pips in profit, so we'll give it some time to play out. Right, RSIs. Aussie dollar Swiss. I'm going to go down through the pairs. Aussie dollar Swiss extended on the 4 hour. Nicely extended. Big hit to the upside. Obviously, this is a big downtrend at the moment. We're retesting again the 24. We have put in a sort of low, high, higher low, higher high, higher low. Potentially, we are going to go for the monthly high, which will be the 72. And at the 72, that might be where we bounce. So basically, this is a flag, potentially, on the downtrend. It could also be peak formation low, and we're switching direction. Main reason for this weakness is this Swiss franc, which is the euro, being drained a little bit at the moment. Aussie dollar's not really doing much at all. So this is mainly Swiss franc weakness, which is what we've seen over the last few days, which is why we're seeing this push. So nicely extended up there. Last time we were there, obviously, trade down. Last time, trade down. Last time, trade down. No reason why we shouldn't. So good entry short. Aussie dollar Swiss, drop down M5, wait for the alert to the downside. You've probably had it actually this morning. So the 15's just triggered. Your 5 is just triggered as well. You would have also had one there. So that's already in a short, potentially. Aussie dollar yen. So again, no more news out of Japan over the last 48 hours. They've gone very, very quiet. I suspect that's because they did their job. When uncertainty is so great, specifying a timeline for reaching a price target may have an unforeseen influence on markets. Well, that sounds very spiritual. May take some time to take, just make sure there hasn't said anything about Forex. Yeah, so a weak yen, hang on. A weak yen has both positive and negative consequences. Early tightening might harm healthy companies, weakening the economy's potential. Right, so there's no more hints in here really as to dropping a bomb on the rates. Okay. So we've obviously had a lot of talk from Japan about potential pump on the yen. No more in the last 48 hours because they scared the market sufficiently for the market to go, all right, and pump some money back into the yen. So we had the yen strength. Yesterday, however, US dollar and CAD went a bit mental and the yen's weakened again. So we're back in the territory of, yes, it looks like good shorts. So Aussie dollar yen extended on the hourly just at the 70 at the moment, same as this one here. So again, good looking short opportunity. I'm always much happier having short positions on the yen because they do press that button and pump it. Same as they do with the Swiss franc. So that looks to me like a very good looking short opportunity. You've also got the backup here of having last week's high and last month's high, literally 3/4 of an ADR away. So if you take your first entry here and it doesn't work out the ADR, the reversal, you can take a second entry there, which is around about 3/4 of an ADR away when you get some weakness coming in, and target back down and assume that this is just going to be some kind of range. So the range is basically just getting tighter and tighter and tighter. Yeah. And we're just basically starting to contract a little bit. So that move is potentially on the cards at the moment. Obviously, if they decide to intervene, you're going to be back down here within days. So it looks good for a short, definitely the Aussie dollar yen. All the yens do. Aussie dollar, New Zealand dollar, extended on the 4 hour. So I've got 3 on this on the hourly RSI extension. The 4 hour is still extended and embedded. It's an absolute mess, this thing. You can see the price action is just awful. We got up to the highs. And we looked like we were going to reject them. We sat there and volatility got huge. The New Zealand dollar had a big rally. At the moment, this thing's just got no clue what it wants to do. New Zealand dollar seems to be weakening a little bit this morning, or that's Australian dollar strength, one or the other. Okay, Australian dollar strength. So yeah, it just can't seem to make its mind up where it's going. So since the New Zealand dollar move, like everything, the New Zealand dollar has been very weak, apart from yesterday. Obviously, the difficulty with this pair is when the New Zealand dollar strengthens, so does the Australian dollar. When the Australian dollar strengthens, so does the New Zealand dollar. So when we got that nice big move on the New Zealand dollar yesterday and everything moved against the New Zealand dollar, the Australian dollar went with it and just caused an accumulation. So a strong currency against a strong currency equals a range. So this is going to be quite hard to get down because any New Zealand dollar strength is going to just cause that. We need some Aussie weakness to get this one back down again. So at the moment, it is just extended and embedded. You just have to sit there and wait. But if you're going to do any drawdown control on anything with any profit you've got, this would probably be the one I'd choose because I get the feeling this New Zealand dollar move is likely to undo itself. However, I'm not sure that the Aussie dollar, New Zealand dollar is going to get down there because the Aussie is going to get strengthened with it. So this will probably flag more than anything. But you've got to look at news catalysts and what we've got coming up as well. And when you look at the news next week, we've got the GDP and the cash rate for the Australian dollar next week. Yeah, so there's two big news events coming up. This is, again, they've done this before. They're forecasting a freeze. Remember what happened to the Australian dollar last time they froze rates? Literally 3 or 4 weeks down. They were like, why are you freezing rates? Look at the state of your inflation. And they've done it again. They're forecasting another freeze. So the Australian dollar at the moment, we're sitting on 3.85. We're sitting on 7% inflation, right? Last time we were sitting at, what was it, 3.5 or 3 point whatever it was, and they decided not to do that. The market just completely tanked on the Australian dollar, which obviously brings down the New Zealand dollar with it. So we have got another forecast rate freeze coming up next week. So there is a big chance that that won't happen, that the Australian dollar will come down. However, if the New Zealand dollar isn't having any strength at the same time, it's going to bring the New Zealand dollar down, and you're just going to get that sort of accumulative pattern again. So I get the feeling that the Aussies might actually increase their rates because the inflation figure they've got is so high. And we saw the same thing with the US dollar. Remember, when we were looking at the US dollar rates, they were freezing them at 5. This was sitting at a negative 1 point something for the quarter. And we were like, look at the speed of inflation coming down. They're definitely going to freeze those rates. They actually increased them. Look at the speed that's coming down. But look at the size of their inflation. That makes no sense to freeze rates at the moment. Absolutely no sense whatsoever. Unemployment is going up. Yeah, if they don't do this quickly and this continues to rise, that is just going to cause a massive debt spiral, and they're going to be in massive trouble. Because they're going to have more and more people unemployed, which costs money, and it all goes spiraling down the pound. House prices go up, interest rates stay up for longer, inflation doesn't drop, people become poorer, it gets worse and worse and worse. It's critical to get this up as fast as possible to get on top of this, which is what everybody else in the world seems to have done, apart from the Aussies. So, although they're forecasting not to do it, I get the feeling that there's potential they might do. And if they don't, I think they might come out, Governor Lowe might come out and actually say, I know we haven't done it this time, but next time we're going by 0.5%, in which case the market's going to like it. So, difficult one. But at the moment, you're literally just stuck in this because you're playing something against something which is meant to be holding itself up. So it's a tricky trade to get out of this one, which is why we've got it embedded. So there is a potential for the RSI to drop and then to come back up and retest the previous month's low and then get a bounce from there. And if that's the case, we're going to be in 5 positions short or so on this. So nothing much you can do about it. But it is still extended. If you're not in it, obviously there's an opportunity to get in it right now, and it may well just collapse. But it might not. Average is well within reach on this. It's only an ADR. Literally, this is kind of one of those trades. If it got down to ADR, I'd probably say, right, scrap it, get out. Aussie dollar, US dollar. Nice big push, got in short on this. That's a lovely big extension. Literally low RSI to high RSI on the 4-hour in a day. So yeah, really nice extension on that one. Hourly RSI extension as well. No profit take move. Literally, we had a V-shape move down there. We went into an accumulation, slammed it, accumulated, slammed, accumulated. Potentially, yeah, could do another one today off of non-farm payroll. If we get up to there without doing a profit take on that entire move, coming down at least 50%, these propulsion gaps are target. So that looks like a lovely short. If necessary, another leg. But yeah, really like that one as a short. CAD Swiss, big moves on that one. Again, potential short entry on the 4-hour. This Canadian dollar, again, depending on what happens with the US dollar news, has got potential to rally further. You've got your monthly high there, which is kind of a double top. So that 175 ADR level, if you're getting in one here, that would be a second entry for a bounce. All we did since we did this big push up is sit in balance for virtually a month, isn't it? Yeah. So that move was kind of the 5th of May or something like that. And we didn't make a move on this until the end of May. Whole month sideways. And then we're potentially popping. So Canadian dollar, oil, potentially doing that. Again, we don't know what's going to go on with oil. At the moment, all oil's doing is being undecided. Really hasn't got a clue. And as you can see, this matches very closely with what the Canadian dollar's been doing. So it's just a difficult one to call at the moment, that one. Where are we? Where did I get to? Aussie dollar, US dollar, CAD Swiss. Yeah, CAD Swiss we were on, weren't we? Euro odd is an hourly. So that's nicely extended to the downside. Again, euro still having problems. We had that Australian dollar strength. Looks good. Lovely propulsion gap targets to the upside. Only just got extended. So same as this one here. If it needs a couple of entries, fine. But euro odd, there's no reason why we shouldn't get any euro strength coming through. Lagarde has come out and said we got 2 more rate increases. Inflation's going up faster than we expected. Not coming down quick enough. Blah, 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 blah. Euro long. So don't have a problem getting long on that. Got nice support coming up as well. You got 2 weekly levels, and you got a monthly back down there. So literally from where we are now, 2 ADR away, you've got 2 major weekly supports and a monthly support. So if this drop, flag, drop, accumulation, drop happens, that's 3 legs down with no profit take. You're going to get the bounce. So it's going to be one of those levels that's going to bounce. But it might just bounce from here, quite possibly. Non-farm payroll could really shake stuff up today. That movement we had off of the US and the CAD yesterday was completely out of the blue. So we might get a really big move across everything this afternoon. Might be one of those non-farms where we see 200, 300 ADRs. Just happens out of the blue, doesn't it, sometimes? So Euro pound, 4-hour RSI extension. Again, Euro pound is a long against a long. So with these two, you're going to get a lot of that. Yeah, a lot of sideways movement. You always do, because these two move in sync, because we're the biggest trade partners with each other. And they're both bullish currencies at the moment. So when they push together, obviously neither of them gets an advantage. So we get a lot of sideways, and then you get the odd move where one of them is asleep and the other one just takes control. So at the moment, it's the euro dropping off of the rate increase. So again, no reason for this. You can see the longs I've had on this before. One there, one there, one there. That one is the first one we've had to do drawdown control on. Second entry gone in. So just looking for a little bit of a push. An ADR kind of gets out on that. That's the last accumulation. So that there is a potential target for a bounce. Failing that, last week's low. Sorry, that's, yeah, last week's low. No. That. Yeah, it's last week's low. Yeah, sorry, we're on Friday, aren't we? So yeah, that's good. Looks like it's in a downtrend, but if you come out on this, yeah, we're not in a downtrend. We're we're in a range. We will be in a range. We're always in a range. It's the euro and the pound. It's always in a range. Pound odd. That is an hourly. So big extension to the downside on that one. Got out of the pound odd short from there yesterday. Straight in, straight out. In Wednesday, out Thursday. Very nice. Propulsion gap target here, potentially at ADR for a push back up if we're going to continue this market structure. Again, no reason why we shouldn't. The pound should be stronger than the Australian dollar until next week when we find out the rates on the Aussie. That may all change, but right now the pound is bullish, so we should be buying the pound. So looks good for a long. Not extended enough for me, but it is extended on the 70. Nice propulsion gap. You got a potential support area there. You got other supports from previous weeks down here at 200 to 225. So if it doesn't bounce from there and you don't get out, somewhere down there, you're likely to get one. Pound Swiss extended to the upside. Again, this one had a big, nice drop down. This is pushing back up again. What's that pound New Zealand up to? Making much progress, is it? So it looks like we got fairly strong pounds this morning. No, we got a weak Swiss franc again. What that is. That's probably weak Swiss franc. Literally today we're going to get this because no one in their right mind is going to dump a load of money into the market before non-farm payroll comes out. So, or the unemployment rate comes out. So today we're going to get a lot of up and down movement. So I wouldn't read too much into the fact that we're putting in a big hammer here. This is just the market moving in a holding pattern, waiting for the unemployment rate to come out. So this is definitely due a pullback, although what we're seeing here potentially could be the profit take move on that, ready for the next leg up. However, this is 3 days solid of ADR. So that was 96. ADR on this is 67. That was 93. That was 96. So it's 3 ADRs in a row straight up on this. Market needs to have a rest, but that is pretty decent rest. So we've got 3 positions on this at the moment. So there is a danger of this putting in another leg. However, the euro should be powering up and that should take the Swiss franc with it. Therefore, this should really be doing something like that. This is just that weakness on the Swiss franc has been unbelievable. And it's just coupled with pound strength at the same time. It's just giving it that extra edge. The perfect storm scenario, strong pound, weak Swiss at the same time, big ADR moves. That's what happens. So may or may not come down from there. Had an exit on that this morning at break even. Could have taken it, but leaving it to run, see what happens. Done some drawdown control on it. Only 3 positions on, so we'll give it the benefit of the doubt and see if we can get a drop down. There is resistance coming up, which is a double top on the monthly. Big extension that. Nice pullback, but it's not quite far enough as yet. That's a 4-hour RSI extension still. Not anymore. It's just about to come off of extension. Pound US dollar also extended on the 4, so that's pushed up. First entry on that one because that was an H1 extension yesterday. Just about got extended yesterday. Just about got the entry on. Sideways at the moment. Potential for US dollar rally today. Drive back down into propulsion. Beautiful double top. Propulsion gap for a bounce. Aussie dollar yen's just hit ADR. Nice area. Very nice resistance. Yeah. So we've got this lovely resistance, this propulsion gap here out of this accumulation, which you can't see. I've got to move myself, haven't I? I'm always drawing stuff up there. So yeah, we've got a nice propulsion gap here out of this accumulation, which got tested, filled, and bounced from. Yeah, so this is a really nice resistance area, tested multiple times, which we're at now. So if it doesn't bounce from here, we've got that weekly high coming up, and there's a monthly high as well. So entry 150 ADR, second entry, Aussie yen. We'll look at that. No, it's Aussie dollar CAD, wasn't it, the other one? So yeah, good Aussie dollar moves. So yeah, pound Swiss we've covered. So yeah, that's coming back down again a little bit now. What's pound New Zealand doing? Just keeping an eye on this. See, this is today, this typical non-farm payroller. Lots of wicks, little small bodies, really not going to do anything until we get the unemployment rate. Pound US, nice extension, drop, looks good. That's extended on the 4 hour, was extended on the hourly yesterday, so that looks nice. Straight up into that weekly there, propulsion gap, big accumulation, propulsion gap. Looks good. However, for that to happen, we're going to need US dollar strength. Not sure about that today, so we might get another leg up. We'll see. A little bit worried about this afternoon's news, I have to be honest. Got a feeling we're going to get a big one today. That move yesterday was they're positioning themselves for something. I'm not sure if they're positioning themselves in the direction they think we're going to go, which is negative US, or they're positioning themselves to entice directional movement the other way to get out of positions to make profit. But either way, I think we've got a big one coming. Might be wrong. US dollar CAD. So that brings us nicely on to the US dollar CAD, which was the big one of yesterday, the 225 ADR move. Got a buy on this on the H1M5. This was just fast as you like. US dollar weakness coming in off the back of the PMI figures as oil went crazy. 150 ADR, meaning the CAD powered up hugely just as the US dollar was dropping. Perfect storm example again. So huge propulsion gap. We got a gap in on that news as well. So this break here is where that move started. Anywhere in this area for a retest at some point. Obviously, that is the main propulsion gap. If you look at where this is potentially going, we've got the weekly low coming up, which is within ADR. Non-farm and the unemployment rate will just scream straight through any level, basically, if it's close. So it's either going to come back up today and we're going to get some strength off the US dollar, or the US dollar is going to tank. And if it tanks, I'll be looking at both of these monthlies, which will be 200 ADR today to the downside. So if it does get all the way down there after doing that sort of move, yeah, the next move is back. So I'm not worried really either way, but I just get the feeling today it could possibly continue this move that it started yesterday. It was just really uncharacteristic to have such a big US dollar move ahead of non-farm. So, you know, the whole reason the market moves on non-farm payroll day is because we're releasing this number. This is one of the key drivers for interest rates. So when you see a big move ahead of it, it means one of two things. Either the market has had the unemployment rate leaked already, or they're anticipating moving it in the opposite direction to the move. Either way, it's a 50-50 shot, isn't it? We don't know. But it's just not normal to have such a massive move again ahead of it. So we'll see. But 1:30 this afternoon, we will find out. In profit on that DAX at the moment, but not really doing much, is it? We just back up at the high of the session, holding at the minute. So dull. Right, that's everything covered so far. Oil, obviously, we looked at yesterday, and we look at all the time, but the double bottom bounce held perfect. So we'll see if we can get that rally. Again, this will move off the back of the US dollar today. So we'll see what happens. Catch up on the chat. Euro pound, covered that. Is there a way for the reversal alerts indicator to leave in yellow boxes and arrows? No. You'd have your chart would be full of boxes. You just wouldn't have a clue what's going on. Tim, do you actively trade H1 and H4 RSI extensions? Yeah, that's all I do. Have you watched the bootcamp, Tim? That's literally the RSI is king as far as I'm concerned. That's all I do is H1 and 4-hour RSI extensions. If so, do you risk getting over leveraged? No. That's why I have leverage. It doesn't sound like you've watched the bootcamp, Tim. Go and watch the bootcamp. Everything about exposure, everything I do is all in the bootcamp. What is your thoughts on funded trader prop firm? They're a game. Run a mile. Go look at their website, right? Look at a professional prop firm. Like my Forex funds. Yeah. Highly professional. Look at the funded trader. Okay. Go and get your kids because it's time to play a game. Let's turn it into knights and castles. No. Just no. Go onto my website. Go to trader funding. I'll put a link here now so you can go there right now. Obviously come back, just open it in a new tab, right? That's the top prop firms as far as I'm concerned. Don't have to take my opinion, obviously, but I've tried and tested all of these. Good. Apart from Surge Trader, not that keen. I just like them because they've got 365 days, but now the Fivers have got 365 days. Kind of like them too. Highly tempted to run a time-modified ORB EA to catch non-farm payroll. Yep, you can do that on the DOW and the NAS. So basically, if you want to run the ORB EA, basically all the ORB EA is a breakout EA. So all it does is it trades a range and you specify the range by time. So if you want to trade non-farm payroll today as an opening range breakout, you will basically pick your instrument, the DOW, for example, and you will set the times to be either 5 or 15 minutes before that breakout candle, which is at 1:30, which will be 3:30 if you're UTC plus 2. So, yeah, do it. But be aware, at the time of the NFP spike, your spread will be like that. The volume will mean that the candle will move from there to there in milliseconds. So it's highly likely that either one of two things will happen. Your pending orders will trigger after price has moved past them and they will turn into limit orders. Yeah. Or you will get your orders put in and price will fly down and you will get your orders triggered there, meaning that that stop loss that you asked for at $500 or whatever it may be could be something like $2,000 instead of 500, quadruple your risk. This is why news trading, it doesn't work. Yeah. News trading as a theory on paper and in demo, in back testing, works beautifully. Try and execute it in the real world. The market doesn't do that. When that figure comes out, one of the banks, right, the normal trading volume going into a candle like that is a few $1 million, right? When that candle comes out, they will dump 50 million in one direction. If from here to here, there is $25 million available in limit orders, it will go from there to there, eating that 25 million in a second. Your order will get executed when the market slows to allow orders to get filled by the other 25 million these guys have just dumped short into the market. You won't get your order on. Yeah. In a simulator, that doesn't happen. In the real world, I've tried it. It doesn't work. So just be careful. Use a very small risk, because you have to assume that your risk is going to be doubled or trebled by slippage. Try it, but try it with small. You might get filled. You know, it might work absolutely fine. It might not. Just be aware of the pitfalls of it. It's difficult. VK, must thank you for teaching. Must thank you for teaching me how to trade FBG. I don't teach how to trade FBG. I'm now consistent trading just FBG on H4 and M5 using market reversal blocks. Well done. You didn't learn it from me. I took your tip and went to look at other strategies and stumbled across smart money concepts. Forex machinist. All right. Okay. Okay. Fair value gaps are not what I teach. Nothing to do with what I teach. I'm not going to say it. I'm not going to go over it again, but it's a certain person that invented the fair value gap, stole it from somebody else. That's why I don't like it. Smart money concepts are not smart because they're thick. They don't work. But the fact that you came to my boot camp and a system hopped off to something that I hopped from because it didn't work, I give up. I teach people how to do it and they go off and go, nah, I'm going to go back to using stops. You're disappointing me, Forex machinist. You've gone back to join the ICT crowd. But anyway, good luck. Sorry, I mean H1 as well as H4, as this is my over leverage. If you get into H1 and it pushes, you get into H4 thereafter. So basically, Tim, if you're trading H4 or H1, right, if you need to pick a strategy, right? I don't trade H4 anymore. I trade H1 personally. So by the time you get an H4 RSI extension, let's look at an H4 RSI extension. Aussie dollar, US dollar. Right? That's where we got an H4 RSI extension. There. Okay. To get that H4 RSI extension, virtually all the time, you have to get an H1 RSI extension. So the H4 M15 strategy is the slow version of H1 M5. Yeah. So if you're trading H1 M5, yes, when you get into your H1 RSI extension, it could push further and get extended on the 4 hourly. But Euro odd has hit ADR. Okay, so head to the downside. So there you go. So it could continue to go. And I could say, oh, if only I'd waited for the 4 hour RSI extension, but they're pretty much the same thing. Look. So you pick one or the other. The reason I show both strategies is because some people can't check their charts every hour. They can only check their charts every 4 hour. The strategy is the same. The entries will be fewer on 4 hour. Because if you look at the H1 chart, for example, on Euro odd, yeah, we had one extension there, yeah, which gave us that trade. And we've got one extension here, which has just given us this trade. That's all we've had on the hourly since the 8th of May. 4 hourly, we've had since the 8th of May, only one entry there, yeah, which was roughly where that hourly was. So it's virtually the same thing, because to get extended on the 4 hour, the market's got to push really hard in one direction. As it does that, on the lower time frame, you will have already got that extension. However, on the hourly, you will get lots of entries in here on hourly RSI extensions at the upside and the downside, which you won't get triggered on the 4 hour. So look at the chart here. We just got pound odd. Australian dollar's moving hard today. So look at this trade here, yeah? This is an H1 RSI extension to the downside. But it's also an H4, because to get extended on the 4 hour, you had to be extended on the hourly. They're in the same place. Yeah, so it's just a different version of the same thing. It's an extension. It's mean reversion on bank moves that profit take. You just get more opportunities faster on the hourly, and you get opportunities you don't get on the 4 hourly. So it is a little bit riskier. You go into a little bit more drawdown. So look at this one. This is a great example. Look, that's the entry on the hourly RSI. The 4 hourly was only there. The 4 hourly got extended there. So your first entry would have been on a reversal. So that would probably be your first entry somewhere in that candle on the 4 hour. So you missed all of that drawdown by getting into the 4 hour. You still experience the same drawdown, i.e. the trade not working, as the person that was trading on the hourly. Sometimes it will work like that. Sometimes it won't. Sometimes the 4 hour RSI extension will just come straight down like that there. But it did exactly the same, as you can see, the trade there on the hourly. They're virtually the same thing. So I don't really look at the 4 hour M15 anymore because the hourly gives me enough opportunities to get exposed. Your job is to get risk on, get exposure on, so that you can benefit from market movement and profit it and pocket the money. Whether you use the 4 hour or the hour doesn't matter. Eventually, you will get fully exposed. It's just that you'll get there slower with the H4. If the market goes into let's say summer trading, right? Summer trading, you will find the 4 hour RSI will get hit way less because the market in summer trading goes into tighter ranges. ADRs drop and it moves a little bit more like that rather than like that. Yeah. So you get less extensions on the 4 hour RSI. So during the summer, you'll trade less. However, on the hourly, you'll still get strong pushes as news events happen, which will take you overextended on the RSI or the ADR. So if I get an alert and I've got no exposure on, I will either take an ADR reversal, an H1M5 reversal, or an H4M15 reversal if I haven't got exposure on. But I don't care which of them it is because all three strategies work. So you pick one. But the important thing is you watch your exposure. So like I said this morning when we were looking at the Aussie dollar CAD, my thought process is we've got an RSI extension. We've just had a reverse alert on it, bang on ADR. Aussie dollar CAD is in a downtrend. So it looks like a good short. This looks like a pullback for a second leg or a third leg or fourth leg, however many legs that is. Pullback on the next leg. So it's a good short. Excellent. Shall I get into that? Nah, I've got Aussie dollar exposure on already. What's next? That's my thought process. Or it used to be before I got the EA and before I built the EA. Now the EA just fully automates the whole thing for me, so I don't even have to think about it. If there is an extension, I will stick the EA on and tell it to get into a trade for me, or not. So don't pick a strategy that works with you, but I would advise to pick one, not pick all. So, but if you're going to trade all, obviously just make sure you've got multiple accounts so you're spreading that risk across different accounts because you're going to find you're going to get the same trades on everything. Look at the VPS at the moment and the exposure. US dollar long. US dollar long. US dollar long. Yeah. So this is H4M15. This is H1M5. This is ADR. It's all the same exposure because as the US dollar drops, we buy it. Doesn't matter whether you buy it on an ADR, an H1 or an H4 time frame. You're buying a dip, waiting for the profit take. So pick one, trade it. I would say if you wanted to trade anything, H1M5 is the best one because you're going to get more entries faster and it's going to give you more exposure to risk faster. But it's also potentially more dangerous for drawdown than H4. Saying that, look at the difference between H1M5, yeah, and then look at H4M15. 9.5% drawdown, same amount of money banked. This is doing a lot worse, H4M5 rather, at the moment than H1M5 because the market conditions and the market movement has suited the hourly better because it's been a bit more like that than like that. There is no right or wrong, and this is what I keep going on about pretty much every day in here. You get in, you get out, you deal with it. If you to worry too much about strategy and when to press the button and when to get out and when to do this, when to do that, you'll paralyze yourself. You won't make any money. So you just literally get in, press the button, then look at it tomorrow and go, did that work or not? No? All right. Well, let's press the button again and see if it works today. Did it work? Yes. Brilliant. It's that simple. Really is that simple, because you've got no way of predicting which way this thing's going to go. So if you want to use this time frame, or an hourly, or a daily, or M30, you know, somebody's messaged me in Telegram saying they're making a fortune on M30 scalping. I don't even class M30 as a scalping time frame, but do what the hell you like. Press the button. It's a time frame. If it gets extended on the RSI on M30, go short. Same way as if it gets above a Bollinger Band on the M30, go short. Or the M5 crosses the 5 moving average crosses the 9 moving average. Doesn't matter how you get in. Just pick a strategy and stick to that strategy and follow the rules of that strategy exclusively. Remove the stops and position trade yourself in and out of the market. That's it. As long as the market goes up and down, you won't stop making money. Pick the one that works, really, is the message. You have watched the bootcamp? Yeah. Okay. So yeah, so I misunderstood your question. That's why I said you probably haven't watched the bootcamp. Now I understand your question. I've been taking H4 extensions on RSI, but I'm considering taking H1 as well, as I'm worried that I'll get in too deep in certain positions. So yeah, I mean, look at Pound New Zealand. So Pound New Zealand this month has been the biggest problem. That was the initial entry on the 4 hour. Yeah, that was also the initial entry on the hourly. It doesn't matter whether you're trading H4 or H1 on this particular example. Yeah, it's a squeeze. A squeeze is a squeeze. You're going to get a squeeze on any time frame. H4 just will get you in often, maybe a day, sometimes 2 days later than H1. Sometimes on a big strong move like this, where you're getting a 150 ADR plus, H4, H1, and ADR are all going to trigger at exactly the same time. And of course, the other option you've got is to adjust your RSIs. So if you use the 21 RSI on the 4 hour chart, you're going to get way less signals. If we move this, let's look at the entry here. Look. So your entry was there. Yeah, on the 4 hour RSI, 14. If we switch to 21, your entry, in this case, this is not a great example because it's this New Zealand dollar rally, but in most cases, you won't have a parabolic move like that, which gets you in. It'll be more of a move like this. So there's your entry there on the 21. So not there, there. Much better. But you're going to miss loads of opportunities that you would have got. So you wouldn't have taken that. You would have taken one there. You would have taken one there. So the 21 RSI on the 4 hour is actually better at the moment. Is it going to be better in the next 6 months? I don't know. You can adjust if you want to, but again, that's another option. If you're worried about it, use a different RSI instead of switching to a different time frame. Again, like I said, there's no right or wrong. There's no right or wrong indicator. There's no right or wrong setting. There's nothing that you can do that's going to give you any edge over anything else. Everything you do in trading has always got a positive and a negative. If you switch the RSI from a 14 to a 21, the negative is you're going to miss a load of trades which are hugely profitable. The positive is you're going to get in later to squeezes, which means you're going to have less drawdown. So what do you want to do? Make money or be in less drawdown? Can't answer that. Everybody's different. Some people may want less drawdown, in which case then use the 21. Don't use the 14 on the 4 hour. You're going to get into way less. But all this, you can backtest all of this with the opening range breakout EA. The market structure, market reversal alerts EA. You can test it. Test a period of 6 months on the 4 hour chart with a 21. Test the same thing with a 14. Put them next to each other and look at it and go, much more comfortable with that. That's yours. Use your own version. Pound New Zealand. This was sitting in What were we in yesterday? We looked at this yesterday morning, 3% yesterday morning. Now we're sitting in 0.38% in profit. Doesn't matter what you'd have done, what you've used, you've still been in that 3% drawdown. Now you're sitting in 3% profit. But anyway, there we go. Hopefully that answers that one. You taught us how to mark up the imbalances. VK. No, I've never used the terminology imbalances either. You've been brainwashed by ICT, Forex machinist. Wide range bars, propulsion gaps, imbalances, fair value gaps, big candle, impulse candle, call it what you like. The same thing, isn't it? But it just annoys me that everybody goes, hey, you trade FVGs. No, I don't. I don't trade what ICT copied from someone else 20 years ago who also invented it 40 years ago. It's the same thing. It just does my head in that everybody thinks that smart money concepts is the way to make money in this market. I don't know anybody that makes money out of smart money concepts because it uses a stop loss and they all get stopped out and lose money. Even the guys at CTI, right? They teach a smart money concepts course. Do you know anybody in this room that knows anybody that makes money using smart money concepts? And if so, please DM me their P&L because I'd love to know how they do it. Just frustrates me the fact that you are a previous disciple of mine that was given a profitable strategy and went off and started using stop losses again. I'm disappointed. That's a big word, isn't it? When someone's upset with you, you can live with it. When someone's disappointed in you, it's much worse. Anyway, I give up. I don't care. Do what you like. I make money the way I make money. Is there a way to make the ADR on the left of the page move or make it bigger as the on-click trade hides it usually? Is there a way to make ADR number on the left of the page move? Do you mean this up here? That 10? Is that what you mean? That ADR 10 figure in the top left from the indicator? Is that what you're talking about? If so, when you put the buttons on, if that's what you're talking about, that moves underneath the button. Yeah? Is that what you mean? Sure. Just press the button. Yeah, just press the button. Try it again, sir. Press the button, see what happens. Right? Pick a pair, pick a time frame, pick a direction at random, get Google or AO to pick it for you, and then press the button, and then get out when you're in profit. It's amazing how easy it is. Tim, got it. Enter on another extension of the market, then manage risk accordingly. Yeah. So basically, if you're trading H1 or H4, Tim, you're trading H1 or H4, right? So if you are using H4 RSI extensions to enter your trades, you're trading the H4 time frame. Your entry is on M5 or M15. That's just where the entry is. But your trade is being managed on H4. If you're getting in on H1, your trade is being managed on the hourly time frame. But in effect, it's the same thing. It's just a reason, a condition. This is a condition indicator. This is a signal indicator. When the market condition is X and signal is Y, press button short. Then go away and do something else and come back and see if the 50% probability of it going up or down has worked in your favor or not. If it hasn't, deal with it. If it has, bank it. That easy, as you know, because that's what I teach in the bootcamp. However, some people don't listen to me, Forex Machinist, and go off and do other things. I'm only joking. I'm depressed. Right, without getting overexposed, yeah. So that's all I've got for you this morning. Anybody got any other things they want to look at? This pound New Zealand, I'm very tempted to get out of. Although we are just testing the Asian low. So is it going to or isn't it going to? That is the question. This propulsion, so basically this propulsion is being retested. See the way I called it propulsion, not an FBG. It's being, so I haven't got a bee in my bonnet at all. That is being retested. So if that breaks, I think we've got that run down into this area here, which is ADR today. However, what I'm also concerned about is this holding and us just sitting like this until 1:30 until we get the news, and then the news taking the pound off or the New Zealand down as it has been in its current trend. So the concern I've got is this is a pullback on a new leg up. And if that is the case, I want out really. So again, this is what we were talking about very first point of this morning, wasn't it? That's the decision you have to make as a trader. Do you want to get out with 0.42% right now, or do you want to hold out for 2% profit? Difficult. Brian, I'm going to watch paint dry. Good one. Looks like it's rejecting. Come on, just get that little pop. Little pop. 3 pips is all you need. And as soon as you get out that low, those stops are going to trigger and you're going to fly down, pop down to my target. Let's just quickly look at what DAX is up to. So DAX has run up into resistance. That's a very old 3-week high. So it's not particularly strong as resistance. Obviously, round about ADR today is where I would expect it to find resistance today. It's holding though. So this this re-entry basically is not far away from being at a break even. So another little push up out the high today, and this will be back at break even. So worst case scenario is $1,500. Best case scenario is if we get to this TP, there's the opportunity to shut the lot out, call it a day, and say didn't make any money out of the DAX today. We'll see. I'll let it run. We'll find out this afternoon how we got on there. Oro? What's that mean, Brian? Oro? Oro? Opening range orifice? Gold. I think we've covered gold, haven't we? So gold basically, this is obviously going to do that or that, depending on what happens with the news. I don't know. It's going to go up or down, isn't it? So we're either coming back up to retest these propulsion gaps to the upside at ADR if we have bad news, or if it's good news, we're going to come back down, retest these propulsion gaps to the low. Either way, you're looking at somewhere around about 100 to 150 ADR moves. But the movement, the direction today is controlled by the unemployment rate, which is released at 1:30 this afternoon. Tune in then to find out which way gold goes. It'll be one of them. I can say with 100% certainty. Up or down. VK, love. Sorry, Lee, but it works for me for some reason. That's fine. That's fine. And I don't watch ICT because he's very boring. But you're quoting ICT concepts. I just pick up a bit here and there from YouTube. You don't know if what you're trading is smart money concepts. Okay. Well, it is. If you're calling it FVG, you are using smart money terminology, which is all recycled crap anyway. So it's the same as everything else. Trade what you, if it's working for you, that's fine. But obviously I will see you in 6 months when all your stop losses have triggered and you've made a loss. Morning. Thank you for the analysis. Morning, Barry. I'm only joking. If you can make it work with, people do make it work with stops. I was only kidding. You know, people do make money with stop losses. There's just so few of them out there. So few. And obviously I know your background. It's very difficult to make money when you're fairly new in it, because you do latch onto everything, and it's totally understandable. I did it. Everybody does it, and it's just part of the process of learning to trade, is going and trying everything, and you cobble stuff together. And the fact that you're cobbling stuff together is great, but you're using stop losses, and I've told you they don't work. They only work on very small time frames, scalping, and if you have the control to stop trading when you make money, which is where everybody goes wrong, because the greed factor kicks in, and that's what removing the stops gets rid of. Gets rid of all the problems everybody that uses stop loss has. Every trading problem you have is caused by using stop losses. There you go. That's just my opinion, obviously. Right, I don't mind. Right, I'm gonna leave it there. Oh, I don't know what to do with this. I just wanted to, you know, when you sit there and you look at a trade and you just think, just break, just do it. Bouncing. Executive decision. I'm going to do drawdown control. So I've banked whatever I banked there. So my average is there. So what I'm going to do is I'm going to take off some of this. So this is 612. So I'm going to use 300 of that. So I'm going to close out a 0.25 on that. So we've got 2.29s on there. So I'm bang on average. So basically this trade is now exactly the same as all the other trades, pretty much. 1.18 banked, 4 positions on at break even. And I'll let the EA now basically just trade that out. But the drawdown control that I've just done there has lifted off the pressure a little bit more. Sat is still at break even, so if this does drop, it will get out. If it does push back up again, we've got a long way to go to get all the way back up to there. And the drawdown control that I've just banked has just paid for probably all of those drawdown controls that have been done there. So the trade is basically now free at break even. So I'm going to leave it there and just see what happens with this for the rest of the day. I think there's a good chance of it continuing to drop, but I'm just worried about this support holding at the minute. We're not making any progress. I'd love to see that break before non-farm. The reason I've done this is that was pretty much $1,000. What I don't want is non-farm payroll doing that, stopping that out at break even and losing the opportunity to bank that 1% and do that additional little bit of extra drawdown control. So that's worst case scenario. Best case scenario is it just pops down and makes target, which is fine. So I've just removed the worst case scenario and put some money in the bank. We'll see what happens. Maybe right, maybe wrong. It's early in the month. So we had a really good month last month. So we'll see. Taib, could you share your thoughts on the Aussie US? I think I've done that already. Yeah, go watch the replay. Sorry, I can't cover it again, but I will. Short. Extended above RSI. Short it. Lots of targets to the downside. However, it's going to go up or down this afternoon, isn't it? Depending on what happens with the unemployment rate. Morning, Astro. Bye, Astro. You're late. Brian, had a decent set file yesterday on the ORB first 4 hour yesterday. Hit reset and forgot to write it down. Not a lot you can do about that. I was just trying to think if there's a way you can Check your logs. I don't think it logs. I don't think it logs. Oh. No, it doesn't. I thought it might have in the logs in MT4, some logs store the EA settings. It's the tester ones that do it. It's not the trade logs. It won't happen in the tester because it wasn't a test. You just have to rethink it, Brian. Always save set files. Everything you do, you'll learn. Just save a set. It's like when you're building something on the web or anything like that, you always save a version of it. When I'm building anything, I always save a version of everything, and you will never not have it. I take screenshots of everything. So settings, when I'm doing back testing, I open up the settings and I screenshot that. So worst case scenario, I can go and look at what it was. Just screenshot everything, save everything. Because if you're like me, you test, well, I'm testing always, constantly. And I'll suddenly go, wow, that's an amazing set file. And I'll close down MT4 by accident and go, oh, no. And if you haven't saved it, that's it. You're stuffed. You have to try and remember. And if you can't repeat those results you just got, which were amazing, you're going to really kick yourself. I'm sure you will. There's not that many settings. I suppose there are a few actually, aren't there? So anyway, we'll see. Right, I'll be back this afternoon at 2:20. So I'm not coming on for non-farm payroll. I'm not going to trade that. There's no point in sitting here watching it go, woo. We know it's going to go like that. What's more important is what it did. And then we'll have a look at it in New York and see where we're going from there. So, all right, so have a good rest of your morning. Don't get too excited. I don't think you're going to get a lot more movement this morning. We're waiting for 1:30. 1:30, it's all going to go mental. So I'll be back at 2:20. We'll have a look at the fallout of the unemployment rate and trade the New York session and see if we can make some money out of the opening range of New York. So good luck this morning. Also, if you've got any US in profit, just before I go, if you've got any US dollar exposure in profit, I haven't at the moment on this one. That's not in profit. But if you've got anything that's sitting in your P&L like that, right, which is on a US dollar pair or on any pair, really, if you want to, put it down there, because if it doesn't go your way, that will turn into a negative. It'd be much nicer to have that as realized profit and then add that trade on again later than it is to have that go into a negative. If you're worried about that, I could have got 1,000 out of that, just take that and let these two also turn into profit and go in there as well. Yeah. So if you've got profit on the table, you know, like I'm sitting on 1.4% profit here, the obvious thing to do ahead of non-farm payroll, bank it. Because if that turns into a negative and that turns into a negative, you just lost 1.4% of realized money, and you've still got to deal with these. So if it goes the wrong way, you've still got to deal with them, but why not deal with them with 1.4% in your bank? Yeah, so just be aware. Everything will move on non-farm payroll. Everything might just whipsaw and come back to where it was, in which case, whatever, doesn't matter. But if it doesn't and it goes against you, you can't get that back. I'm going to leave these running because this is the EA running this, but if you want to, bank it. Word of warning. Been there many times sitting on that, and all of a sudden then after non-farm payroll, I'm sitting on minus 10%, and I've gone, oh, why didn't I bank that 3%? Hindsight, wonderful thing. It's no use to you financially though. Okay, have a good morning. I'll be back at 2:20. See you then. Good luck. See you this afternoon.